In this week's episode of the Stockscores Market Minutes, we're going to discuss the difference between day trading, swing trading, and position trading, and give you some information so you can decide which style of trading is right for you. Plus, I'll do my normal market analysis. We'll look at the US stock markets, the US dollar, Bitcoin, gold, oil, the fear chart. I'll then look at the day trade of the week on JWN, and we're going to do a market scan for the longer term trade. I'll show you how to change the settings so the person looking to own stocks in their retirement portfolio, how can you use the market scan to find those? That's all coming up. All right, so what's the difference between day trading, swing trading, and position trading? It really comes down to how long you intend to hold the trade. So a day trade are closed out before the end of the day. You might buy it at 10 o'clock and sell it at 2 o'clock. Swing trades are held at least overnight and typically less than 2 weeks. And then position trades are longer term trades that we look for maybe a hold period beyond 2 weeks up to a few months. And then of course you have long-term investing, which we're actually going to talk about at the end of the video. But there's more to it than that, because there's different things you have to think about when determining which one is right for you. Now I would say the shorter the time frame, so day trading versus swing trading, day trading has a shorter time frame. The shorter the time frame, the more skill is required. With my strategies, the approach is pretty similar. The signals that we look for, we talk about action candles breaking from high probability chart patterns. Well, whether we're looking at a daily chart for the position trader or a 2-minute chart for the day trader, the concept's pretty similar. But you have to think quicker. You have to be better at reading chart patterns when you're a day trader. So that's the main difference, is that just that speed of thinking. And what happens when you have to think fast is it also arouses your emotion more. And emotion, of course, is the enemy of every trader. Now, when you're thinking about entering a longer term position trade or even a swing trade, you've just got more time to think about it. And that means that there's less of that fight or flight response where you're frantically trying to make a fast decision. Now, again, intellectually, the decision is no more difficult to make when you're day trading versus swing trading or position trading. But because you have to do it faster, it requires more skill, more practice, that sort of thing. Now, you can turn your capital over a lot quicker when you are a short-term trader. And so the potential annual return can be a lot higher when you're day trading or swing trading versus position trading, simply because you're moving your capital a lot more actively. The reality, though, is that it's also a lot harder to be a really good day trader. It's not impossible by any means. Anyone who's willing to put in the time and effort to practice and learn can be a great day trader, and then you can really start to get that better performance. But realize that it is a skill that takes more time to define. And so if you are an aspiring trader, I encourage you to start with a longer term time frame, practice, and then start shortening your time frame as conditions and as your skill allows. Now remember also that when you're day trading, you pretty much have to be in front of your computer during market hours, perhaps not for the whole day. Some day trading strategies, you can do all your entries in the first hour of the day, or perhaps even for swing trading, the last hour of the day. For position trading, you can do your work in the evenings or on the weekends. And so it comes down also to when is your time available? What is your ability to think fast? Do you need to think about it slower? Well, then be a position trader. Can you think fast? Do you like the excitement? Then perhaps day trading or swing trading is right for you. Now, I teach 2 different types of courses. The active trader course is for day trading and swing trading. The position trading course is the investor course. And which one you do depends on the style of trading that you're interested in, what your time availability is, and really what your personality is. Are you patient? Do you like to take things slow and easy? or do you like the action? Do you like to move fast? Well, those are important questions to consider as well. If you want to learn more about the Stockscores Trader Training, go to the website stockscores.com. Under the Trader Training menu, there is a number of links there with videos and that sort of thing. All right, let's get into this week's regular market analysis. Oh, sorry, I wanted to just show some charts quickly. So this is the same stock, EYES, and the first chart is a day trading chart where we've got the action candle on the 2-minute, and the trade goes up from just under $13 to over $15 in the course of just a couple of hours. So that's a day trade. I mean, not a phenomenally successful one, but the kind of thing we look for. Now, the same stock made a swing trade entry a little over a week ago when it made its action candle break right there. So on a percentage basis, this was a huge move from roughly, $3, or actually I think it was more like $2, up to $20. I mean, that was a huge mover, obviously. So on a percentage basis, the swing trader got a lot more out of it because it moved well over the following 3 days. And then as a position trader, well, you could buy the daily breakout, the daily action candle from that low volatility pattern. Again, showing that the concepts are kind of the same, but just the time frame is different. And in this case, you just would still be in this stock because it still hasn't given a sell signal based on the daily chart. So which chart you use is going to determine or be determined by the style of trading that you do. I've shown you here the same stock with the ability to trade that same stock 3 different ways depending on the style of trading that you do. All right, now we can get into this week's market analysis, starting off with the US markets. I was a little concerned last week because the markets were testing that upward trend line. Go watch last week's video and you'll see the comments on that. Well, the good news is that this week, the market was able to break this sort of parabolic downward trend line here, right there, and we've made a nice recovery. Of course, we came back well off of the lows, even with that trend line break. And then the market basically has gotten stuck at the old highs. And that's what we expect to have happen. If you were in my active live daily webinar that I do for day traders and swing traders, you'll know we talked about this a fair amount. The market made a nice bounce back. When markets rally into resistance, like they had here, they usually get stuck at resistance. So it hit that, pulled back on Friday. But I still think it's a relatively healthy chart. It's doing what we expect. It may pull back a little bit more next week, but the longer term trend is still up. And this is where we see that longer term trend. There we have it. You can see that we dipped below last week, managed to come back. This week bouncing, coming into the old highs, where I expect the market will stall. Looking at the NASDAQ, it is really underperforming the comeback in the large cap stocks, and that's those tech stocks, which many of whom really had big gains, the Teslas of the world, astronomical gains, and they had a lot more room for profit taking. And now we're seeing them starting to bounce, but they're still well off of their highs, and it's going to take some time for these NASDAQ stocks to repair. And so be a little bit more patient with the NASDAQ names. Looking at the Russell 2000, it has managed to break through to new highs. So this is those small cap stocks that have really given us a lot of excitement through the fall and winter. And the fact that they were able to break out to new highs this week is a good sign. I think we see it continue higher, although in the short term, a little pullback wouldn't be bad or surprise me. On to the Canadian markets, the TSX 60 is also moving to new highs and looks relatively healthy. The trend is up. The longer term chart, you can see we're reaching to new highs, so it looks healthier than the US market simply because it is at new highs. And that's largely motivated by the comeback in the oil market. Of course, lots of energy stocks on the Canadian market. The TSX Venture, which is those microcap stocks, went parabolic. So you can see how the trend went parabolic. When trends go parabolic, they usually pull back to the upward trend line. So once you get the breakdown, something like that, you should expect that price is going to pull back to the trend line. That has happened for the TSX Venture. Pretty good support there. So I still think that there's some opportunity in this market, but certainly not what it was just a month ago when the trend was still going quite steep to the upside. Onto the currency market, there's the US dollar. I talked about it before, this break from a little rising bottom. That means to me that the US dollar is starting to recover. This week it did a little bit of a pullback, but I still am fairly optimistic about where the US dollar is headed. Onto the Bitcoin chart, which a lot of people have been asking me to cover. So here it is. The linear trend line is intact. You can see we run away from the trend, pull back, run away, pull back, and now we're bouncing off of it. The question is, will we make a new high on this bounce back, or are we going to make a falling top, which is what it's starting to do? It feels to me like Bitcoin maybe needs to take a little bit of a break and trade in sort of a pennant pattern here. And I wouldn't be surprised if we see a little pullback. Generally speaking, the long-term trend is still up, but don't be surprised if you get a pullback in this ETF down to 45, 42 before it tries to bounce. So be a little bit selective and cautious with Bitcoin and in the short term. All right, on to commodities. Here's the gold chart. And here we have the upward trend line that looks either like this, if you want to be really liberal, or like this. I would say this is probably more accurate pivot points, and we've come back to it. We should bounce here. The gold market is oversold because it's far below the downward trend line. So there's a decent chance we see gold bounce back in the short term, but it is still relatively pessimistic. So maybe a short-term trader can take advantage of some strength in mining stocks, but expect that to be a relatively short-term trade. And we could also have the risk of breaking that upward trend line, which could happen at any time as well. So be pretty selective with gold and mining stocks. Meanwhile, in oil, we continue that upward move. We're getting back up into this old trading range here, which is where we will find some resistance. So in the next little while, expect some resistance up in that point. I think oil can still move a little bit higher, but it's getting a little late to come to the party. More of a case of holding the winners as opposed to looking for new ones. Onto the fear chart, and fear is relatively low, so not too much concern there. So my ratings then, bullish long-term for US and Canadian stocks, but where it differs is that I'm neutral short-term on the US and bullish short-term on Canadian. Gold, neutral long-term, bearish short-term, and bullish on both time frames for oil. The markets have done well to defend that upward trend line. We talked about that last week. It had that good bounce back at the end of last week, and that has kept the buyers in control. We should expect a gradual improvement in the markets, but be fussy. It takes time for these charts that have been in pullback mode to stabilize and start to build optimistic chart patterns. Now, gold is showing some early signs of stability as it is at that upward trend line. And oil continues to have that strong upward momentum, but it may be a little late on the oil and oil markets. Fear is relatively low. All right, so let's now go into the day trade of the week. And of course, every week I run just an example of a day trade that we talked about in the Active Live service. You can learn more about Active Live at Stockscores.com. The idea here is that we are watching for something called an action candle. And when we have our algorithm find an action candle on any of the US stocks, we cover the entire market in real time, then we look to the chart to see if it has a good pattern. So JW Nordstrom was one that did this at the open, and a few of the retail stocks did this. Kohl's also did this. Now the chart of Kohl's was a little better. JW Nordstrom had a little bit of resistance to deal with. It managed to break through it, but what's important is it had that action candle right there and the spike of volume, and that told us that there was some optimism around this company. So we then run our risk management. For every $100 of risk, in this particular case, we would take 330 shares. That's a $12,600 position, but of course, because it is a more expensive stock, you can leverage this if you want, 3-to-1, which when day trading is a good way to get better returns. So that meant total capital required on this trade was $4,215. Now by the end of the day, it had made 10 times its risk. So there you can see we're at about 10 times the risk. So for $100 of risk, it made $1,060 gain. That was a 25% return on the capital required on a one-day hold. And those are the kind of day trades that we love to see, especially on good quality companies where you're not worried about the company going out of business before the close. All right, now we're going to jump into the market scan, and this week we're going to do something a little bit different. I know not everyone is a short-term trader. Perhaps you just want to buy 15 or 20 stocks a year for your retirement portfolio. Well, if you're doing that, you should emphasize the weekly chart for your picks. And so what I'm going to do is show you how to change the weekly chart, and then we'll run a market scan and see if we find anything. So we're going to jump into the Stockscores website. Here I have a chart of Microsoft open right now. I'm going to slide down to the charting option tab below the chart, and I'm going to change this from daily to weekly. And instead of 8 months, I'm going to make this 3 years. Now, when you do this once, you set a new default. So now you can see I've got a 3-year weekly chart for Microsoft. If I was to pull up another stock like Amazon, it will now be a 3-year weekly chart. So I've set my new default. All right, so now we jump into the market scan tool, and we can run one of our usual scans like the abnormal break scan on the US side. But what we're going to look at are the weekly charts. It found 22, and what I want to see now is, do any of these have good weekly charts? And as always, we're looking for those strong abnormal price breaks from low volatility. So here is SEEL. It had very abnormal action on Friday, but it's coming into quite a bit of resistance, was quite volatile, so not a great looking chart. This one, not a great looking chart. I, of course, can teach you what to look for. That's really what I do with the different courses that we offer at Stockscores. And with a little bit of practice, you'll be able to go through these really fast, looking for those good chart patterns. Now, I don't see any yet, and I may not find any. I run these sort of scans every day, and some days we find them. This is a chart of Macy's, and it's making what's called a cup and handle pattern. So here's the downward trend line. That's been broken. We came up to resistance here, made a little sideways action, and this week, at the end of the week, we're breaking out from that pattern. That's a pretty good chart pattern. I'm a little disappointed that the volume isn't real abnormal, so I'm going to give this one a 6 out of 10, which means I think it has a 60% chance of working, of moving higher in the weeks and months ahead. We just keep cycling through, looking for one of these predictive chart patterns. That's just one. There's probably a dozen that I look for, although there's probably 3 or 4 that are my favorites. Here's ADNT, another pretty good chart pattern. It's a little bit late. The reason I say that is the breakthrough resistance actually came back here. It's then gone sideways for 3 months, and then this week breaking out. Again, volume's not real strong. It probably had some stronger volume on Friday. I would give this one a 6 out of 10 as well. So we've got a couple of 60% chance of working. I'm still looking for something better. We've got a couple more charts to go through. This one, limited brands, already up a lot, too late. And this one, too much resistance on this chart, so not really what we like to see. Well, that has been the Stockscores Market Minutes for March 15th. Hope that you've enjoyed it. Please click on the like button, subscribe to the channel, tell your friends, tell your enemies, tell anyone who will listen. But most importantly, next week, trade well.